Alrighty, folks, we are back with the one and only Mr. Adrian Hernandez, who has a great report about Southern California real estate. Adrian, what do you have? Who do we give credit for creating this? And let's take a look at what it has.
What's going on, everybody? Good to see you, Zuber. Well, you guys, it's interesting, right? Market is doing some interesting things here in Orange County. First and foremost, I do want to say this report is brought to you by the one and only Stephen Thomas, who has the reports on housing by Stephen Thomas here in Orange County. So you guys can go to reportsonhousing.com to visit his information. So all this information is from him. But what's cool is he was showing, like, the last year demand over this year demand. He's showing active inventory this year compared to next year. And then what's even cooler, Zubers, he broke down like counties, right? So San Bernardino County, Los Angeles, Orange County, San Bernardino County. And we're able to look at buyer demand, active inventory from this year compared to last year. So I'll share that. And that's pretty cool.
That's going to be pretty cool because, yeah, Stephen, thank you for doing this. Thank you for allowing us to share it. It's, last Q4 sucked. You remember, right? Smashed into a wall, no demand, flippers losing six figures, right? It was a pretty rough Q4. So it'll be interesting to see how this one stacks up.
And it's interesting, right? I would say this week alone, like, we've noticed a big change just here in the brokerage, right? News got out that there's going to be, some sort of rate decrease next year, right? That's kind of trending all over social media right now. Which is interesting because of that, we've had some interesting things take place in the market, right? We've noticed, like, things are flying off the shelves. Literally this week, I'm getting multiple offers on deals that were not moving prior to. Right?
Oh,
like,
come on!
Are we on Instagram?
Are we doing this again? So
We're doing it again, Zuber. They sold. I had a house that should have not sold, and it sold.
So, okay. So this happened in February, March, right? So last year, the market slowed down, rates matter, right? This year we went to 8%, demand stopped, days on market were expanding, inventory was building. And then rumor gets out that the Fed's going to whack rates 4 times. We see a drop from 8 to 7, and you're getting multiple offers. Homes are selling at prices they shouldn't sell already. It's already happening.
Already. It hasn't even been 3 days. 4 days. I mean, how long has it been since news got out? What was it, Friday? Or was it Monday?
I think it happened Friday, but yeah.
I think it was Friday, right?
Yeah, happened Friday, probably Friday. hit the social media Saturday, Sunday, and then
I'm talking to 2 of my, call it board of advisors. Hey, what do I do with this house? They're like, dude, there's no way. Like, you're done. You're going to lose. Like, just, you need to drop it, X amount, right? I don't want to say details, but he's like, drop it X amount. And I'm like, all right, okay, let's do it. Zuber, 24 hours later, I get a full price offer. Thankfully, he didn't drop it. He didn't drop it. Thankfully, I get a full price offer, and then 2 more come in back to back. So anyway,
so you have a stale listing. It's overpriced for 8% mortgage rates. Rates come down to 7.25. People realize they're going to be going lower. You get 3 offers in 24 hours. What price point?
In the 500 to 600 range.
So this is Inland Empire.
This is technically considered, yes. Okay. Borderline Inland Empire, Los Angeles.
So 5, 6. That's a little above the median.
Right above the median.
Right. Yeah, that's what I think. Okay.
Right above the median.
Wow.
And we'll talk about, after it closes, we'll definitely talk about details on it.
Yeah.
Right. Because I do want to go over that, because when you find out the details of the subject property itself, it's mind blowing. So,
okay.
Anyways, let's get back to the Southern.
Let's get back to the report instead of you blowing my mind.
All right, guys. So let's take a look at something. This is super cool, right? So these are all the properties from all the properties in category number 1, and then de-stressed properties in category number 2. So we're looking at 11/23/23, which is what, 2 weeks ago, right?
Reporting week ago. Yeah. Okay.
So let's just take a look at all properties. Los Angeles County, current actives, 5,000. Demand over the last 30 days, 3,000. We have a market time of 50 days in Los Angeles County. Okay. Right. So it's actually one of the lowest if we take a look at it, right? It is definitely the lowest, followed by Orange County at 59 days, Riverside County 90. We got San Bernardino County 97, which is interesting. That's a That's an interesting thing there, in my opinion. San Diego County, we got 67 days, and then Ventura County at 65 days, with an average of SoCal at 69 days of market time.
Well, let me just walk Los Angeles County, the purple line on the top, to make sure I understand this. So what this report is telling me, as of today, or as of this report, days on market was 50 days.
Correct.
What it is telling you is just 2 weeks ago, days on market were 88 days. 4 weeks ago, it was 84 days. A year ago, in the worst of the worst, it was 102 days. And 2 years ago, when the market was stupid, it was 34. That's what that's telling me.
Which is crazy. We've split 50% from 1 year ago.
Well, even more impressive, dude. You're down 40% from 2 weeks ago. That
Right.
is that's what you just told me. Before we get this spreadsheet, you told me about a house that was stale, not getting anything, 3 offers. That's what that tells me, is holy cow, demand is jumped in 2 weeks. That's what that says.
Yep.
At least in LA.
At least in LA, right? And I think some of these numbers are, when you look at San Bernardino County, there's you got a lot of overpriced properties in,
Wish pricing, yeah.
Yeah. In like the, the high end of San Bernardino County. And there's actually quite a bit of those, surprisingly. Right. And so I can see how that messes with that. But if I look at like just San Bernardino in a whole, it's crazy, especially in the last 2 weeks. It's even crazier. Right. And I think he doesn't have it. Oh, I think he does have it broken down into cities. Let me see.
Yeah. This report is very interesting.
I don't have, he does not give us San Bernardino broken down into cities, but I'm going to reach out to him and ask him.
So when I say Inland Empire, that's Riverside County, right? Or is that San Bernardino?
That would be San Bernardino, and Riverside County would be Inland Empire.
So it splits. Okay.
Yeah, it splits. Yeah, it splits.
Right.
And then you got 2 different counties in between.
Got it. Okay.
Yeah. Then you take a look at Orange County, right? We got 23 actives with supply over demand. We have 1,100 over the last 30 days, 59 days on market, 61 2 weeks ago, right? Which is, I mean, we got 2, it's not that much, right? 56, 81 though, compared to a year ago, and then 20 compared to 2 years ago, which makes total sense. It was insane 2 years ago.
Yeah. So when I think about Orange County, and again, unlike LA, who's clearly spiked, Orange County's like, but again, it's a smaller market, higher price point. You know, what do you think the percentage of cash buyers is in Orange County?
It's high. It's very high.
It's probably the highest of those 4, right? Or
most definitely. Most definitely. Yeah. Los Angeles is up there though. Los Angeles, there is quite a bit. I would say Orange County and Los Angeles definitely do have the highest. Right. Yeah. And then when we take a look at these stress properties, I'm curious to know, and I'm going to reach out to him to figure out how exactly he is pinpointing distressed.
It's got to be short sale REO. That's what that has to be.
Yeah.
Well,
or probate.
so
let's
just talk. Yeah. I don't think probate would be in there. No, there's no chance probate's in there. It's got to be, because probate would be higher than 183. More people are dying than that. But the takeaway from distressed sales, remember all these crash bros telling us foreclosures and short sales are going to destroy the market? You're not even 0.5%. You're not even 0.5%.
Nowhere near there. I know I saw one guy on social media like raving that he got 1 NOD. So I reached out to him and I'm like, hey, I'm just curious, how many did you reach out to and how long has this been?
Yeah,
it's been 2 years. I finally got my first NOD. I'm like, good luck, man. Good luck.
Yeah. So I guess what we take about from this is don't count on foreclosures and short sales. That's what that says.
Exactly.
Man. What? So I want to go back to before we looked at the spreadsheet, because the chart. I think what you're telling me is rates matter. Not only rates matter, but the expectation of rates matter. That's what I think you're really telling me, because this is happening in the winter. Can you imagine what happens in the spring?
In December.
Dude, the middle of December.
It's crazy. It's absolutely crazy.
Yeah.
I have one more report of Orange County doing a market breakdown if you want to take a look at.
Yeah, let's take a look. This is crazy. Yeah.
This is cool. So this is super cool. So he breaks this down as
Ooh, I love this. This is my whole luxury versus entry level nonsense. I love this.
So anything under a mil in Orange County would be considered median and or under median, right? Anything over a mil, let's just consider outside of that, right? So you could take a look at, let's just take a 0 to 750. We got 41 days on market time, 19% of inventory, 27% of demand, which makes total sense. 62 days compared to last year, right? So we're down. What is that?
Again, not to pat myself on the back, but I have been calling this for at least a year.
Yep.
Entry level below the median on fire. 2x the median and above slowing down.
Clockwork.
This chart nailed it. Yep.
And you can look at, right? You can even, some would even say, Adrian, but median sales price could be 1.25 in Orange County, looking at the 60, looking at this could be, right? I'm still going to say it's that under a million. You still got 16% of active inventory, 24% of demand. And then you took a look at that million to 1.5, then it drops to 10%, 14% demand, 68 days on market. I bring that up.
It's just where the transactions are, right? You're getting a lot more transactions below $1 million. Hence the inventory is low. It's just selling faster. Hence, you're probably right. The median is $1 million, but it's obvious. The higher the price goes, certainly when you get 2x the median, right? 2x the median is $2 million and above. You're 144 days out. It's crazy. Or that was last year. You're 115 days out.
115 days, yeah.
Yeah, you're 3x. You're 3x the cheaper homes.
Right.
That's crazy.
And what's crazy is when we take a look at that 1.5 to 2, how there's still a market time of 68 days at a 2 million sales price, which is pretty crazy, right? With active inventory, 13%.
Just so much money in Orange County.
Just a lot. And that just goes to show, right? Or else we would see high days on market there. And then right to Zuber's point, right? That's something he's been talking about forever, guys. That look at $2 to $6 million. Done. $6 million is done. 4 to 6 million is done. 1%. Yeah. Then you got 2% on 4 to 6. Yeah. So you agents out there, I understand you're trying to swing for the bigger houses, but just take a look at your buyer demand here. Like this is really important.
Why are you spending all that money on the glossy covers of the magazines when the chances of selling are slim? You got to conserve some cash, guys.
Yeah, with the market time of 444, you're holding marketing costs for 440 days. That's absolutely insane. Then you look at 4 to 6 at 240, right? 6%, 2% market demand, which is crazy. Last year we were at 527. So to see the days go down there by, what would that be? Half? A little more than half.
Yeah.
That's kind of crazy, right? And I also think that was due to a lot of high-end buyers moving from Los Angeles coming to Orange County, getting out of that whole riffraff that's taking place in LA.
For sure.
We've definitely seen that. A lot of athletes, a lot of celebrities that have sold in LA coming here.
Yeah, exactly. Well, this has been a lot of fun. Again, I think this holds for I still go back to how this conversation started. And I want to hear from other real estate agents. Are you seeing properties that are below the median or at the median and below in your markets that were stale, that all of a sudden got action? To go from stale to 3 offers in a 24-hour period is frightening to a guy who's been looking at data for 20 years.
Yeah.
That's and it's the winter. It's December. Not supposed to happen, Adrian.
Power of media. So crazy.
Guess.
Like this happened on Friday, sold on Monday.
There you go. Adrian, somebody want? Go ahead.
Sorry. You know what it was? It was everybody who saw the news line picking up the phone, calling all their clients saying, we got to take action now.
We got to go now. We got to go now. Because we can't wait till the spring. They're not going to be there. Do you guys remember last year? You lost out. Go now. Go now. Go. I guess people are going.
Good luck. You can find me on Instagram, guys, at Adrian Hernandez. Do not forget the One Reno at a Time event that is taking place in February, guys. I cannot wait. I'm beyond excited. If you have not gotten your tickets, are they done? We
are sold out. We are only doing virtual. You got a $99 virtual ticket. It's the only way to see it now.
Too bad. So sad. We'll see you all there that bought a ticket. Appreciate you, Zuber.
You got it.